ambulatory healthcare, 25,000, medical centers, 12,000, nursing and residential care facilities, 8,000 over the year. Healthcare has added 390,000 jobs. Employment in construction rose by 45,000 in April. Inclement weather no doubt had something to do with that. After changing a little in March, and over the 12 months, construction has added 280,000 jobs. In April, job growth was concentrated in specialty trade contractors, 11,000 there, with employment gains evenly split between residential and non-residential components. Employment declined over the month in non-residential building construction, 8,000 down there. In employment, it continued to trend up in transportation, warehousing, 15,000 there. Employment in mining fell by 15,000, with most jobs in supply activity from mining. 10,000 there in oil and gas extraction, 3,000 there since the beginning of the year. Employment in mining has declined 49,000, with losses concentrated in supply activities for mining. Employment in other major industries, including manufacturing, wholesale trade, retail trade, information, financial activities, leisure, government, showed little change. The average work week for all workers on private non-farm payrolls at 34.5 in April. The manufacturing work week for all workers edged down 1/10 an hour to 40.8. Factory overtime edged down 1/10 an hour to 3.2. The average work week for production non-supervisory workers was unchanged at 33.7. In April, the average hourly earnings for all workers on private non-farm payrolls rose 3 cents to $24.87 over the past 12 months. The average hourly earning increased by 2.2%, and employees edged up 2% to $20.90 in April. The change in total non-farm payroll employment for February was revised from 264,000 to 266,000. Change for March was revised from 126,000 to 85,000. Poetry there. With revisions, employment gains in February and March combined for 39,000 jobs. Lower than previous reported over a 3-month period. Job gains averaged 191,000 per month. Now, this is the overall picture they had was not as good as one would have expected, but we are obviously part of the problem we're seeing here is the legacy of the Depression, and also at the same time there is now a demand problem. We can clearly say that, and that's a worldwide situation. So let's bump to the UK here, and the shares in pounds on election outcomes surge. You could expect that. The FTSE rose at 2.3%. The currency market, the pound was up 2 cents against the dollar at $1.54. The Conservatives unexpectedly managed to secure a slender majority to relief of investors. In the run-up to the election, opinion polls suggested no one party, that's what they call a hung parliament, Bank shares saw some of the biggest gains. Fleet Street is busy. Shares in Lloyd's Banking were up 5.7 there, while Barclays was up 3.7%. Energy firms saw their shares rise as Labor wanted a price freeze and more power for energy regulations. The British gas owner, Centrix, rose 8.1% there. And from Robert Preston, he's the economic editor at the BBC, to state the obvious, investors love the Tories' victory. Here's some reasons he gives. One is that Labour is threatening of breaking up the banks and imposing caps on energy. Second is that investors have been discounting days and weeks of wrangling after the polling day who would form the government. So with there. And third, many investors tend to be economically conservative, instinctively conservative. So understand where the investor class is, as well as jumping against the dollar. The pound rose against the euro, climbing more than 2 cents to $1.37.74 euro. The market often likes a bit of consistency, stability. Most markets do, and if the conservatives are returned to power, they will be able to push through a lot of policies, no doubt about that, and approaches that they have done over the last 5 years in Parliament. That's from Jason Hughes. He's with CMC Markets. Analysts say the rise could be short-term because they face a number of things. Britain leaving the European Union. A referendum could be coming there. And from Bill O'Neill at UBC Wealth Management, sterling will, in our view, be moved by a number of different factors in the coming days and weeks. The Scottish dilution debate might affect the path of the pound quicker than we think. The good news is the current fiscal trajectory remains firm in place. Importantly, the Bank of England has not been confronted by a change in fiscal framework. This could prompt lower for longer interest rates. Well, effectively, this is the same policy the Fed and other banks are following in the U.S. there. Colombia has banned herbicides on cola. Very way to go there. The U.K. trade deficit narrowed in March. And let's look at it very, very quickly here. To 2.8 billion pounds there. A 10.1 billion deficit in goods was bigger than expected, but was partially offset by a 7.3 billion pound surplus in services. Goods exports were 1.4 higher in February, while imports were down 1% for 3 months ending in March. Decline was 7.5 billion pounds, 1.5 billion more than the previous quarter. The value of the pound increased 10% against the euro since the beginning of the year. This held back exports in the UK, which were down 2.7 billion the previous quarter. So that is the story of the UK and their deficits out there. China will go to it. China's exports fall 6.2% in April against the forecast rise. This is imports also fell by 16.1% compared with forecasts of a fall of 12%. This means the country's trade surplus has risen to 10.2 billion rupees there, and that would be $32.4 billion. and 18.6 billion rupees there. Recent economic data showed further signs that the Chinese economy is slowing, no doubt about that. In U.S. dollar terms, China's exports fell 6.4%, while imports fell 16.2%. Trade surplus rose. We gave that. The economy grew in 2014 7.4%. It's the weakest in 25 years. And the new one has some official numbers maintained and now reported by media in both currencies, factors based on U.S. dollars and the yuan over the last year. So Chinese factories are no doubt changing, and this is one of the things that will affect the entire global economy. Let me just grab one other thing and we'll do the numbers here. With Amazon, detailed drone delivery plans. They have these nice drones here, and you'll see a picture on some of the portals. The unmanned vehicles will also be able to talk to each other about weather and traffic conditions. Face many regulatory hurdles, no doubt about that. They submitted in September of 2014 to the U.S. Patent Office after it approved the idea. So the Patent Office has published the drones. According to plans, the drones will be able to update their routes in real time. It's kind of interesting there. Last month's car market said that it would try out packages delivered to the boot, that's in the UK, with Amazon and DHL. Amazon will employ a variety of unmanned vehicles depending on the shape and weight of the product. Amazon plans for drone delivery increase pressure on the FAA, that's in the U.S., to allow more U.S.-based drone research and development. Amazon's been testing its drone system in Canada, where aerospace regulations are more relaxed. But in September, the FAA granted permission to start testing. The drones can fly no higher than 400 feet and must remain within a pilot's line of sight. So the Amazon Prime Air little drone will literally float into a yard or a space near you. We'll see it coming, as they say, forth. As no doubt we have expected for a very long time. Let's go to the markets here, and hopefully we'll hit the right button this time. The FTSE at the FTSE 100, we usually give it at 159.87. That was on Friday. In Amsterdam, they were at 12.001. The DAC at 301.76. In Paris, 123.17. In Brussels, 67.61. In Madrid, 244.40. In Zurich, 219.78. In Moscow, 19.80. In Bombay, 388.02. In Karachi, in the negative, 212.58. Also in Lahore, minus 6.72. Colombo, 0.43 in the negative. And on Wednesday in Tehran, 98.90 in the negative.